Hello guys, it's Joel here again at Trading Group 101. So good morning, good afternoon, wherever you are in the world, and we're just having a quick look here at the Asian session for gold. Wanted to jump onto a quick video. It's something that I have been watching for a little while, this market, so I want to do a little bit of a breakdown for you and see where things are at. Just share a trade idea that I've been watching for a little while. So we start off on this higher time frame. We're here on the 3 monthly, okay, on the quarterly time frame. And what we're going to do, use our usual process here, start mapping out some of these higher time frame, just key levels, if you like. We'll pop some of these in, and some of you may already just notice what it is that I've been watching. So, as I say, we've got this. They're probably the key levels that we need to be paying attention to here on the 3 monthly. But what I want to do is just zoom in a little bit closer here to these levels here on the 3 monthly. Bear in mind, still got a good number of time left on this particular candle, on the current candle that's open. Still over a month and 15 days, so pretty much halfway through this candle, exactly almost. Now, what has the market been doing? We have been rising up over the last couple of years, hit these highs around the $2,000 mark for gold. Saw all of the rejection candles into those. Tried it to break through the 2,000 barrier once, twice, and now started to move back down. We broke this level here. It's quite a significant level for the market, just on a more recent level. So if I just pop that in for now, okay, because this will come into our trading decision. So where we're at here, look, market kind of broke back down, created a base, made a second drive up to the $2,000 mark early this year, and then has since fallen away. This is where it's significant. We broke back down below, so we made a new low here. Okay. Now that level that we're just currently trading at, if and around, goes back all the way to 2012. Now the market has then traded back into that region over the last couple of months, well, last month and a half, and we're now re-meeting this level. Okay, so bear in mind this is quite a significant level, acted as a key level of resistance before, acted as a bit of a level of intermediate support here. You can see market bounced into it and bounced off within that 3-month candle. This is what we need to remember. These are 3-month candles here, so a lot of trading has happened within those. It acted as resistance here on this candle here, and twice actually. So for 6 months there, acted as a level of resistance, and then acted again as support. Look, a wick into there, a wick into there. You can see it twice before we've broken back down. So it's quite a significant key level, and it's got a high probability as acting as a good level of resistance now as we trade back into it from the underside. So let's have a look into where we're at. We could drop down onto the weekly, and what we're going to do is map out some highs and lows for each year. Okay. So just give me a moment while I just do that and set up and go through our usual process of mapping out these levels. And we'll see where we're up to. That's a bit dodgy, yeah. Right, so that'll do for now. Go to horizontal rate tool. We'll just mark out the highs and lows for each of these years as we go through. Change the color of them, just so we can. Orange is actually a bit similar, isn't it? Yellow? No, yellow, you can't really see much. Go for a blue, bright blue. The low for this year, somewhere around about there. As you can see, this happens time and time again. Doesn't matter what chart that you're looking at. Every time you use this technique, always you can see how relevant they are, because the next year, lo and behold, to the T, the low of this year is exactly the same as the previous year. Okay. Also, the highs of this year, exactly the same as the previous year. So you just get these macro key levels already mapped into your chart for you, and it gives you a massive, massive advantage anytime that you're looking to conduct your trading. So low in for the year there, and the high in the year just as it crosses over, really. So we kind of had an intermediate high there, and then this high for the year there. We'll pop that in for now. Put that low in, and then obviously the highs that we mapped out there. The lows for this year are already in there. The highs for this year are in there. What I'm going to do then is take out, well, actually what I'm going to do something a little bit different. We'll pop in the rectangle tool and create that as a zone between the two. And we know then that's a nice little target level that we can look into. So right, what we'll do then, take away these vertical levels. Now try to take away the horizontal levels that we've already marked in there. So let's just kind of do that. Yep, so that's all of them off. And again, now what we can do is, this works out quite nicely. We can pop in another zone in there. And this is probably too large for us to do so. Any other one? I would do that one, it's slightly too large, but that's a nice little zone that we can trade into. And the reason why I make those as a zone is because if we do go into the top there of this zone, as I say, if we move past that top level, if price was trading through this region, just because it's gone past there doesn't invalidate the reason that any area within that could be a resistance region. So if we start finding support anywhere within there, I can then start to make some trading decisions based upon that. Right, so let's look at where we're at the moment. Most recent price action on the weeklies. The previous week has had a massive base off this level here. Big base built throughout September. And we've driven off that price into here, okay, into this key level that we're just seeing right now. And prices then stalled this week. We've had a bit of resistance come in straight away from that key level. So it's what I've been watching, as I say. That's why I want to bring this all to your attention. So mapped into our yearly highs are from the 3 monthly highs as well. So now let's kind of look into, can we map into this chart a little bit more context? Can we add in our quarterly highs and lows? And we'll just do that quite quickly. Right, so do that. We'll get our horizontal rate tool again and we'll work our way down. That low's already in for this quarter. Again, the low here is already in. It's certainly something that you can do again, look. If you want to, you don't have to do that, but we can just kind of make those. Again, we'll map these out as a new color. We'll go for green on these levels, just to make it nice and simple. Make it clear to see what these levels are, and then you know what they mean. That's always useful. That high's already in there. And I'll make that a little zone again, because as I say, you can see price moved past that zone a few times, but it's acted as a key level of support, just simply as a zone opposed to anything else. So mapped out high, low there. The high for this quarter, yep, certainly is in there. The low is in there, already mapped in for us. Here, I can just pop that in as that was already in there previously. Low for this quarter, just about there. High for this quarter, the low's already in there. High in for that quarter, the low again, it's just as it kind of tips over into that new area, into the new quarter. Here, the highs already marked in. The low's already marked in for this one. Can we get high marked in there for us? The low. It's probably just as it tips over, so I don't need to put anything else in there. These are already marked in as well, and then I'll pop in the low there. Right, so that probably gives us all of the context that we need from our multi-time frame analysis here to give us our higher time frames, so we can actually work out what we're doing and give ourselves some nice context to our trading. So already, as you can already see, got some really nice context to our trading, as I just said. Look at all of this, all of these key levels that we've got marked onto our trade, and we can actually then start making some trading decisions based upon those, and we know that they're all going to be quite nice and relevant. Is there anything that we can do on here to tidy the market up? So that's what I'm now going to look at. Now, the market has traded through that green zone a couple of times without respecting it too much since going back to September, where it acted as a level of support. Probably if it trades through it again without really noticing it or reacting to it, I'm going to probably remove that off my chart. But for now, given the fact it's given a few solid levels of support before, probably not going to. So I'll leave it on for now. Walk straight through there. Yeah, I'm probably going to take that one off, just simply because it's traded through a couple of too many times, more than I want it to. I can just kind of tidy that up by making that zone, take those lines off, because then I've got my zone already in there. Just tidies the chart up from what I can see, what I'm looking at, you see. Yeah, I can take that off if I want to. And there, it gives us some really nice context to our chart. So let's have a look into what the market's doing right now. So it looks like on the daily chart here, we are traded, as I say, right the way through. And then the last couple of days, price just paused around where we're at the moment. Not to say it's going to immediately reverse, but that's certainly giving a good indication that the buyers are starting to take profits, lose a bit of momentum. Sellers are starting to take a bit of a stand around this price level as well. So important just to note. Now remember, these are our highest time frame. It's our 3 monthly level, so really, really key. But important to say that there's nothing to say it can't trade back above and kind of react from there. It doesn't have to be a hard and fast level. It's just a great region for us to start getting invested into our idea. Okay, so you can see that even clearly now on the 30-minute time frame. Look, where we've got this resistance really building on that 30-minute time frame, traded through once, twice, tried to go through again, and we start to fall away again. As I say, you can see it even more clearly on the 15-minute time frame. So all of these trades here just really kind of give you a good indication of where we're. All of these key levels are giving a good indication of where we're up to. Now, having skipped a couple of levels, what I am going to do is just kind of bring this into a daily highs and lows. All right, just here, just by doing our same process, daily highs and lows of the market. Then we can give ourselves some nice context. So there you go, daily low, daily high, daily high. The lows are already marked in from the previous day. Amazing how many times this happens. The low here already in from this previous zone. You can see how easy that was already marked out. We know that some prices have broken above that zone. That it's acted as a good level of support, built the base of support there and broken through, and that's catapulted us to the next region higher. What I should have done is just put these in a different color. Put these in purple, so we know what we're looking at. Don't get them confused with the other time frames. Gives us good context when we're looking into it. So these lows, don't need to put that in there because it's on the bottom of the range. And then the high for the market there. Lo and behold, the highs of these previous day acted as a key level of support for the the following days from there. Now we've got a high in there for that day. The lows are all around there as well in that region, and the highs again right at this level. So it gives us good context as well. The last previous day high here has already been respected a couple of times. What we could do as well, because we know that this is acting as a little bit of a zone opposed to anything else. Just kind of make that our daily zones, so we know there are daily highs and daily lows. So it gives a good context now as again what we can start making some trading decisions. So hopefully that's given you a good idea of how to break down these key levels. Now it goes without saying, with the resistance that we're seeing around a key level over the past couple of days, these trading patterns here, just key resistance selling levels. It's just quite clear, quite textbook selling into a key region. Market's trying to break above, it isn't getting there. So you've got nice levels now that you can start targeting. You can start putting even though these are early days and the price certainly could break through the 1790 region, there's no reason why it couldn't. You can see lots of volatility around these price levels without getting into too much about them. But let's say if we put our stop loss there as just an early trading decision, is what I'm looking at. You can easily make a 2-to-1 risk to reward there to see a breakdown in price. Can we retest this region that we've built a level of support at previously? It turns it into a 4-to-1 risk to reward ratio. And if we were to look at that from a higher time frame, looking at these key levels, I think that it's certainly not unreasonable to suggest a bit more of a fall off in price from these levels. Oh, I've got the wrong one. Make that a bit bigger for everybody to see on a higher time frame. Yeah, so if you look at this, obviously, going back into that key region there, it's not unheard of. As I say, it certainly wouldn't be beyond the realms of possibility when we look at the higher time frames. But certainly, I think for an initial trade, for an initial rejection of where we're at, without a doubt, there's a possibility here to sell this market quite significant sell-off, and at least target a nice 2-to-1 risk to reward ratio where we could trade back into this level that was previously marked, 2.6-to-1 ratio. Just by looking at the previous rejections, we already had 1, 2, 3, 4 on a 4-hourly time frame. Put our stop loss above a psychological level of the 191, so it's above the 1790 level, the 1790 level. So above that, we're at 1791.7, and it still gives us that nice risk to reward. So I think there's lots of probability there that we could make a nice little trade. So yeah, I thought I'd just jump on and give you a little bit of a context of what I'm looking at into this Asian session, and see how the rest of the day could sell off into the rest of the week. This selling could easily gain momentum and see a few of these regions just get targeted again. Another, just while we're here, let's have a look. This built our support here, and we kind of zoomed all the way up. Can we add any more context into this from these retracements? Could we see like a retracement back into the 38.20 region? 100% could do. Without a doubt, that could easily happen. So even just fulfill a nice 1-to-1 risk to reward there, that's certainly possible. Even if the trend continues and it was to break above that, visiting a 38.2 reversal at Fibonacci before it did that, more than possible. So see how close as well this target could be within the 61.8. Easily could visit that. It's right in between that golden Fibonacci ratio between 78.6 and 61.8. So lots and lots of confluence in there as well for this trading idea. So let us know what you think as well. Have you been spotting this level previously? If you haven't, let us know what your thoughts to this analysis are and what your bias for gold is over the next few trading days.